Hey, everybody, and welcome back to A Millennial's Guide to Real Estate Investing. I'm your host, Antoine Martel, and today I have Al D'Andrea, who started investing in real estate about 10 years ago when he was 24 years old. He first bought a duplex, and then he scaled all the way up into where he is today, which is $7 million in real estate assets with no investors. So we're going to talk a lot today about multifamily investing and how Al went from a duplex all the way to where he is today. So thanks for coming on the show, Al.
Thanks for having me. Really excited.
Yeah, so tell us a little bit more about that first deal. I mean, were you still in college when you were 24 when you bought that duplex, or how did that first deal go down?
I wasn't. So I went to, University of Rhode Island, local school, got a business degree. Always knew I wanted to be in business, not necessarily in real estate. Definitely knew the whole time I was in college, was not interested in being there, but just went through the motions like most people do. So got my bachelor's degree in business, ended up going to work for actually a large local regional real estate developer, more commercial shopping center type company. So I started doing leasing for them, and it was a really good opportunity. Was working side by side with their senior vice president. So I guess I was more on the corporate real estate track at that point, and due to I had family illness. My mother, got ill and ended up passing away. So I ended up actually coming back into our family business. So my dad owned a window cleaning company, and I came back into that because he was at the point where, he just didn't want to run the day to day of that anymore. Semi-small company, 4 crews on the road, very mom and pop service type company. So I was excited at the time, just being business oriented and being able to step in and help my dad. Came into that business, and really that was my focus during my 20s. So I really was investing in real estate totally on the side. Really, my first deal came about because I needed a place to live. So needed to, move out, wanted to get my own place. So what better way than to, buy like a side by side duplex, live on one side, kind of cliche. Everybody talks about it, buy a multifamily and live for rent free, or rather rent out the other side and they'll pay your mortgage. So I get laser focused and I wanted a side by side duplex, didn't look at anything else. And this was during like 2008, 2009. So obviously that was like turmoil.
Yeah.
I don't know if you were in the game at that point, or if a lot of your listeners were, but I wish I knew what I knew now back then, because that's a hell of a time to be investing in real estate.
Wow.
Financing was obviously tight, but everything was completely chaotic. So that first side by side duplex I found, that was bank owned, and it was on 1 acre. It was in like a suburban neighborhood. It was just an ideal rental property. So I went at that. Took 9 months to close it.
Wow, 9 months.
I was that persistent on owning a side-by-side duplex. I did not give up. The whole time, my dad saying, "What are you doing? You're wasting your time. Why are you, waiting around? You're not going to end up getting it." And everyone kept asking me, "What's going on with that property?" My friends, and I'm still looking for other deals, but I was definitely committed to it. So stuck it out. Finally got all the title issues worked out. It was, ready to go. Because it took so long to close, so long to, come to that point, they needed to reappraise. So I originally went under contract for $228,000, and when they reappraised, maybe 7 or 8 months later, it appraised at 175.
Oh, wow.
So the realtor said, you've been so patient and so good to deal with. I'm just going to tell the bank to sell it to you for 175. And at that time, the property was probably worth like 250.
Yeah.
It was it was a really good situation. So I ended up buying that property for 175. To make a long story short, I put down 3.5%, my own money, money I saved up valet parking cars in college.
Yeah.
It really wasn't a lot of money. It was like 7,000 or 8,000. So I put that down. And to make the situation better, at that time, Obama had come out with a first-time home buyer tax credit to incentivize people to buy real estate because the economy was so bad. And I actually got my down payment back. I got $8,000 back at the end of the year. So I bought that property, no money down. That's really how. So I lived there for 3 years. I think I might have bought one single family during that 3-year span. that I ended up moving into after. But yeah, at that time I was really building the window cleaning business, and I was involved in some other business ventures too.
Yeah.
But so yeah, I mean, from there, I knew at that point I wanted to go bigger. So I actually reached out to another investor that owned other duplexes in that neighborhood. Said, "Hey, you interested? I'm thinking about selling this duplex." He ends up, that day on a handshake, he offered me. Well, I told him I was looking to get like 280 for it. Shook my hand. We made the deal. So I ended up selling that property for 280,000.
And how long did you own it for?
It was less than 4 years.
Oh, wow.
And I got the homeowner tax exemption because I lived there for two out of 5 years. So, yeah, I paid minimal taxes, walked away with over 100,000 at the closing table.
Wow.
And yeah, it really was like a big, it was a big thing. It was a payday for me. I was like, wow, so I was obviously still young in my 20s. Having all that money in my checking account was a little uncomfortable for me because I was like, do I buy a car?
Yeah.
But I knew what I wanted, so I stayed patient. I actually tried to do a 1031 exchange.
Yeah.
And I paid the $1,000 to put that money in escrow, and I couldn't line a property up. So it took me, I think from there, it took me about a year and a half that's that 26 unit I think I had mentioned to you that I bought. That duplex pretty much funded the down payment for that 26 unit.
And that was so you're, just for reference, so you're in Providence, Rhode Island, correct?
Yeah, I'm
or close to it.
Yeah, I'm 10 minutes south of Providence.
Okay, cool. And then was the first duplex in and around that area, and you grew up in this area too, so you knew it very well. And
yeah, so Rhode Island, obviously, I'm sure is the smallest state. I knew the state in and out.
Yeah.
The neighborhood, the duplex, it was about, I'd say, maybe 15 miles south of Providence. So it wasn't far.
Got it.
Yeah.
Okay, cool. And then so you sold that duplex 4 years later. So the first 4 years you were kind of just living in that duplex, and then did you have a tenant living in the other side paying for your mortgage, so you were kind of living for free?
I did. I think it cost me $300 a month.
Okay.
To live there.
Got it.
So yeah.
And then you sold that duplex. Now you had $100,000 in the bank, and then you found a 26 unit. So how did that deal come about? And were you nervous to go from a duplex to a 26 unit apartment building?
Yes, I did skip one deal in between. So my first real apartment building that really, aside from duplexes and things like that, was an 11-unit apartment building I purchased in 2013 at 28 years old. I still owned the duplex at that time. I had bought a single family that I was living in between all of this. I bought a single family that I was living in that I sold that to buy an 11-unit apartment building, which I don't know how much detail you want to go into. That was another kind of crazy deal in itself. But that really is that's what cut my teeth in the multifamily in that 11-unit, because that building was in very tough shape.
Yeah.
And, we probably should talk about that because there's definitely some learning.
Yeah, so let's talk about it. So was it occupied? Was it bad because there was a ton of work that needed to happen to it, or what was the deal with it?
Yeah. Okay. So that one, that was 2013. I was 28 years old. It came on our MLS. So it was listed it wasn't listed on LoopNet. It wasn't to any commercial brokers. It was listed by a residential real estate agent.
Weird.
And it wasn't listed properly. They just, the way they presented the financials, that the wrong person got their hands on this thing. So that excited me because I figured it wouldn't get in front of all the major players. So I came in very strong. My original offer that we put on the contract for was $725, and the numbers worked, but it was a strong offer. But it was a brick 11-unit building. Everything checked out. It was really good neighborhood. I really wanted it. So I came in very strong, $725 for an 11-unit. And when I was doing I was completely scared. To answer your question, when you said to make that jump from a I've never been so scared. I'll be honest, so scared in my life.
Yeah.
Part of it was because of my dad. My dad's not a real estate investor. He did really well in a small business, but real estate, I guess, he didn't know a lot about it, and it kind of scared him. And the whole time he was like, you better be careful. This is the kind of stuff that can, sink you,
Yeah.
and you don't stay. He was very nervous with me. So the whole time I had, I respect his decision. He's my father, and so he's in my ear saying all these things, and I'm doing the inspections during due diligence. And everybody's like, "What are you paying for this building?" And I'm telling them, and they're like, "You're crazy. You can't pay more than 50 a unit, and the numbers don't work." And on top of that, all the tenants were really just, people smoking cigarettes in the hallways, totally mismanaged building. One of the residents was like managing it. It was one of those situations. So really scared the whole time. But I was moving forward. I was committed. I knew I could turn it around. And I got a call from the lender late in the process saying that there was a zoning issue. For some reason, the tax assessor had it as an 11 unit, but in zoning they had it as an 8 unit. For some odd reason, it was zoned as an 8 unit, but it was illegal. As far as the city knew, it was an 11 unit. It was legal conforming. I guess when they built it, for some reason, it was built as an 11 unit from day one. They put it through as an 8. Maybe they intended to build an 8. They decided to build an 11. The paperwork never got put through. I don't know. Definitely no illegal units. And the bank said, well, we can only finance based on an 8 unit. So they had it appraised as an 8 unit. The seller was completely, obviously upset about it because he had bought the property cash, I think maybe 5 years before this. He never obviously had it checked out. So there's this zoning issue, and he paid based on, an 11 unit property, but he really needed to sell.
Yeah.
So we ended up making a deal. I bought that property for 480.
For 480?
For 480, an 11 unit building that today is probably worth close to $1 million. So that deal was like another freak thing. So I got it closed, and then as far as repositioning that building, I was at that building every single day for probably at least a year. I went there every single day, and I actually evicted tenants one by one, cleaned up the units. I really didn't have much money in the bank to do it. I was just funding it from, cash flow, really just, being very resourceful to make this deal happen. And today that building, it's probably my best building. It's flawless. It operates, I have all like, professionals in there, and the units are, I think there's one tenant left that was there. She's really good. But 10 out of the 11 units have been completely renovated. So that was very crucial for me. Like, I couldn't picture myself, my largest building now is a 26, but I could never picture myself walking into like a 100 unit complex without having that experience from that 11 unit. It gave me the confidence, I could pretty much handle anything after that. That's how I felt.
Exactly. Yeah, because for me too, I've done 50 flips this year, single family, duplex, fourplexes, but haven't got into the multifamily side of things. And now I'm closing on December 14th on a 20 unit apartment building in Memphis, Tennessee. And it's a big step for us too. And, we just put the right people in place to where we feel comfortable about doing the deal. And, I don't know much about property management or construction or anything like that, but I know how to make the numbers work and to add value to the building to make the numbers even better. So, what made me feel comfortable was putting the right people in place. But for you, self-managing and all that kind of stuff, I don't know how the hell you were doing that on top of because you were working at your family business, right? And then
I was completely running the business. My dad pretty much had stepped out 2 years after I came in. I was completely running that, 20 and up, that company now has like 10 crews on the road. That's a very busy company. But yeah, I had a lot going on. And, in my mid 20s too, I was involved in like a web startup. So I was very ambitious, but I decided real estate. I knew it was time to focus. And long term, I wanted to do real estate, specifically multifamily real estate.
Yeah.
So it's funny when you say, you're looking at me and, how'd you do this self-managing? I feel like that's easier than when you tell me you're buying a property. You're in California, right?
Yep.
You're buying a property, halfway across the country.
Mm-hmm.
You're buying a property. Man, to me, that's scary. that's a little foreign to me. I've never, like I said, everything I own is probably within a 15 to 20-minute drive
Yeah.
from my house. So I guess that makes me feel like I at least have control. I can go there, I can check on things.
Yeah.
Um, it's just two different ways of looking at it.
Yeah. Yeah. Two different strategies. I mean, I can't. The thing is, in California, my 20-unit apartment building would be, you know, would be 8 million bucks or even more. It's ridiculous, the prices over here. And then I have to deal with all the laws. So I'm not sure what the laws are in Rhode Island, but in Memphis, Tennessee, the laws for tenants and for evictions are way more relaxed than they are in California, because California is a tenant friendly state, while in Memphis and all in the Midwest, it's more landlord friendly. So that's the other thing too. It's the price, but also the rules and regulations. And now I can really add value to apartment buildings. I don't need to deal with rent control and none of those things either.
Gotcha. Yeah, I'm also in a very tenant friendly state. New England's very liberal.
Yeah.
Um, but yeah, there's I'm in unlike California. I mean, I'm an hour south of Boston. Boston is probably one of the top 5 rental markets in the country.
Yeah.
I do not even go up there. I have zero interest.
Yeah.
Everything is, to me, it's out of control. The numbers don't make sense.
Yeah.
So for me, Rhode Island, it's where I'm from. I know the area very well, and I also have a decent network. Now I'm at the point I do get calls. People know what I do.
Good.
So it works out.
Yeah. And then so that building, the 11 unit, then you've owned it for 5 years now then?
Yeah, it's 5 years. In October.
So is your note coming due, or did you do a refinance? Did you already do one?
I refied.
Oh,
So
nice.
I think I heard you say, and I've heard others say, it's a new term for me, the Burr strategy.
Yeah.
So I've been doing that all along. Apparently, I never knew it was a thing. That's what I've been doing. So I refied Warwick, the 11-unit property, not too long ago. I got all of my down payment back and definitely all my renovation money back.
Wow.
My mortgage went up $1,000 a month. I don't even feel it.
Yeah.
So yeah, I got a nice, and I purposely did that because the rates are rising, and I wanted to lock in some long-term debt. So it was an opportunity to get my money out.
Absolutely.
At that time.
Yeah, yeah. Now you own a building free and clear, and everything you make is just profit now. But now you can also take that cash that you got from that refinance, which is then in your bank account. So is that what you use then to scale up to the 26 unit? And is that what the cash you use for?
I just recently refinanced. I refinanced this year.
Oh, really? Okay.
11-unit property.
Got it.
The 26 units. So those funds from the duplex all along were still sitting in my bank. I didn't use that to buy the 11 unit. I sold a single family house and had some of my own personal money that I put into that. But those funds from the duplex directly really went into that 26 unit. That was in 2016. That one was another. I guess the point I definitely want to drive home to everybody is that, you have to sometimes come with your best foot forward, get these deals under contract, and sometimes things happen while it's under contract. You get control of the property, you get a little deeper into the process. Nobody really wants to turn back. Things do come up, things change, and sometimes luck can go in your favor.
Yeah.
On the 26 unit, I put that under contract for I think 1,130,000. I ended up getting a $30,000 credit for just some deferred maintenance. So 1,100,000. That property appraised at around 300,000 more than I paid for it. So day one, I went in with 300,000 in equity. Again, I was very scared. 26 units. I obviously, from an operational standpoint, I had the confidence, but it was a big deal. That it was over $1 million, and it was 26 tenants, and I was very nervous about it. But I went in. I got that strong appraisal. I had been sent. I send letters out to I just send letters out to local owners, and I think 3 months after I closed on the 26 unit, a doctor reached out to me that I had been sending letters to of a building 2 buildings down on the other corner, just by coincidence, reaches out to me, says, hey, you've sent me 2 letters now. Let's talk. He put me in touch with his lawyer. So now I'm like, oh shit, because I am completely out of money. And I said, this is a great opportunity. So now I started thinking about investors at that point.
Yeah.
I went to my lender and I told her what was going on. I said, I have this opportunity by this other building. It's on the other corner. It'd be a really nice package with the 26. She met me there. We walked it. We had breakfast that morning. She said, Al, I don't want to see you have to bring in investors. I want to see you do this on your own. Couldn't believe she said it. She said, I think because you have so much equity in the 26 unit, I think we can refi it. And this was 3 months later. So because normally it's minimum 6 months. A lot of times it's a year.
Yeah, or even longer. I asked my bank, and they said they want to see 2 years of rental income increases.
So yeah, at that point I wasn't even considering refinance. I didn't even ask. She came forward with that. We ended up refining the 26 unit. I bought the 16 unit. We put it in one loan. We put it in one loan as a package.
Yeah.
I came up with very little money to buy that 16 unit. So that all happened within 3 months. I acquired 2 buildings, added 42 units to my portfolio.
Wow.
In 3 months with doing a refi.
Oh my God. And so what kind of lender was this, like a small local credit union or?
It's a bank. It's a local bank.
Okay.
But they're very aggressive with commercial real estate lending. So yeah, I obviously at that point knew I had a good relationship going there. Yeah. No, so I've done 2 more with the same lender since then.
Yeah, they sound amazing. Wow.
Yes. So the point is, a lot happened fast. Sometimes I wonder if I never bought that 11 unit, like would have that momentum been there if I didn't buy, then I stepped up to that 26 unit and was able to refi, and it's one foot in front of the other. I don't think anyone needs to get ahead of themselves. I haven't done, for the amount of real estate I own, and the amount of units I have, I feel like I haven't done that many transactions. Yeah. So it's like you don't need to do 10, 20 deals a year. I guess if you do 1 a year or 1 or 2 every year, it's just as long as they're quality, and you do your homework, you'll do well.
Yeah, and if you buy right, I mean, the thing with you is you bought at amazing deals and amazing prices. So we'll talk about how you found those deals, but buying a property and it appraises $300,000 over, from day one without doing any value add, I mean, that's a great buy. The other one where, it was supposed to be an 11 unit, it came back and the appraisal went, from 700 you were supposed to buy it for, 450. That's another 250 in the bank there too. So there was a lot of buying right on your part, because then when it comes time to do the refinance, then you already had you had equity from day one. Then the market increased and you increased rent, so you probably the property's all doubled in value, and then you can refinance and do the burst strategy like you were saying. So, right. And then with that too, if you take it like you're saying, take it slow and slowly scale up your portfolio, then you don't need investors. The only time you really need investors is when you're going to do some, if you don't buy right and you can't do a refinance, or if you're trying to do too many deals and you kind of deplete your own personal resources and you need other people's money to help fund those deals that you can't control, kind of.
Yeah, I'm not against using, and I'm probably going to take that route eventually where I do private money. I just never realized that was a thing, to be honest. I know it sounds crazy. Sometimes I'm embarrassed to even admit stuff like this, but in my 20s, I never once considered asking anybody for money. I mean, I knew obviously I could use banks. Yeah. But my father was old school in the sense, he literally hated debt. He bought his cars cash, just that mentality. So I always had that in me. And in my 20s, it was just work, save, and invest in real estate. I didn't really think about investors. And I wish I knew that then, because I did pass on a lot of deals. I had a lot of opportunities I walked away from just out of fear of not having the capital. Yeah. But I also don't regret getting off to that slow start. Because I was able to learn every single aspect of the business. Yeah. And now I know, when I eventually hopefully buy 100+ unit complex, when I walk on site and the maintenance guy's doing something wrong, at least I could, guide him, or, I catch things that maybe a high level Someone who's just involved with the finance side wouldn't know.
Yeah. Yeah,
Um,
absolutely. So your current portfolio then, so how many units do you have right now? 85, you said?
I have 85 and I have a 24 unit that I just put under contract.
Okay, awesome. So close to 100 units that you're about to have, and you're doing all the property management yourself, correct?
Yeah, so I'm self-managing in house. I did form a management company.
Okay.
I have a maintenance, maintenance staff. I have a full-time, leasing agent slash property manager.
Okay.
It's really not enough units to have a full-time property manager, believe it or not.
Yeah.
But between the leasing, administrative work in the office, bookkeeping, payables, receipt, all of that, I can utilize one full-time person.
Okay, got it. And then are you giving any of those people in the property management company like a free place to, like an on-site maintenance person, a free place to live, or is this all just paying them a
Yeah,
salary?
yeah, everyone's just getting paid a salary. They absolutely would be open to that if
Okay.
somebody was interested.
Okay.
It's not the case.
Yeah. Yeah, because for my 20 unit, I'm debating on which. I have a property management company that I'm hiring, a third party one who's going to manage the property for me. But, then I'm also debating, okay, should I get an on site maintenance person and then I can cut down all those, things can happen, things can be fixed right away and just give somebody a free place to live and pay them a stipend every month to, be our on site maintenance person. And so I was wondering if
So,
you ever tried that.
so, so in addition to the third party management company, you want to have a separate maintenance person on site?
Yeah, or I would have the property management company. I'm very close with the property management company. It's a pretty small company, so I'm working with them really tightly, and I would work with them to find a repair maintenance guy, and they would be kind of working for that property management company, but I would give them a free place to live and all that kind of stuff.
It's always nice to have somebody on site that has some kind of an interest,
Yeah.
and would reach out to you if something's not right,
Yeah.
because most tenants aren't going to say anything.
Yeah, exactly.
To be honest, most of the people that have come forward and wanted to help weren't people I wanted.
Yeah.
They were just tenants that I knew weren't going to last long term.
Yeah.
A lot of times when you take over a building, sometimes tenant that maybe fears that they're eventually their rent's going to go up, or they're just not going to make it there because they don't conform to rules. They try to get buddy buddy with you very quickly.
Yeah.
They want to help out so they can add value, and you'll keep them there. But yeah, the right for me, I've never had that right person come along, or I've never had somebody that I put in a building to watch after. Luckily, I'm so close, and there's something always going on, so my maintenance staff's around,
Got it.
to catch things.
Got it. All right, cool. And then let's talk about how you found all these deals. So one of the things that people who want to get into multifamily complain about the most is I can't find deals. So, you talked a little bit about sending off the direct mailers to property owners in and around the local area, but have you seen success with that? I've tried it out. I've also cold called those property owners. What has worked best for you, or what would you recommend to find more deals in your local market?
So I think it's a little bit of everything. I don't think there's any one way. If you're serious about getting into multifamily, it's very challenging to obviously find a deal. I think for anyone, no matter where you are in the country. So I literally sometimes on a Sunday would drive around, see buildings that I like. I'd pull over, write the address down, back to my house, go on the tax assessor website, and I just have a little very standard letter, nothing fancy. Just saying I'm a local, business owner looking to build a real estate portfolio. Please contact me. For every maybe 100 letters I've sent out, maybe 2 contacted me.
Got it.
It's a very small percentage.
Yeah.
But I think it's something, I got that 16 unit from doing that, so it obviously was worth it. I think where I'm at right now and moving forward, I think the best way I see is to get in with maybe a local broker,
Yeah.
somebody that you can maybe let in on the deal.
Yeah.
So
Interesting.
I've partnered with a broker, and it's funny. A lot of brokers want to be in the game, but they're hesitant to get in the game because
Yeah.
they don't want to piss off their clients. There's a little bit of a conflict of interest there. So if they have a way to kind of like a backdoor way to get involved in on a deal without their name being plastered all over that deal, they're more apt to bring you. They're going to bring you more deals. They want to do it too, you know.
That's a
So
really good. Yeah, I've never heard that. So tell me how that went down. Was it like, hey, this is your commission supposed to be 6%, but or 3%, and we'll wrap it in as an equity position, or how did you play that?
so I actually partnered 50-50.
Oh
Um,
wow.
and yeah, 50-50. And he he asked me because I said, I think I'm going to need to get this was an 18 unit that came after the ones we've spoke about. I said I think I'm going to need to get an investor. Like I said, I was always trying to do it myself.
Yeah.
That was my approach, and I was falling short, but it would force me to be creative and resourceful. So I said, I think I'm going to have to get an investor for this one. He's like, listen, man, if you're open to it, I'm willing to go in on it with you. And I said, yeah, sure. I didn't pitch it to him. I wish I could say I did, but he kind of came to me and we did it. And now, we formed a pretty good relationship. I see more coming from that. So for me, that's the most promising thing because, for every deal that he gets, he probably has like 50 investors like all over it, you know?
Yeah, and a lot of them just want to take it down themselves or have a pool of investors, and they would never even think of bringing a broker or an agent into a deal.
Right.
Yeah, yeah, but now he's going to come and bring more deals to you if he has the capital. He's going to send it to you first and be like, "Hey, want to partner on this one?" Yeah,
Exactly.
you're not going to come and say no, you know.
No. No. So it's like anything else. It's about relationships. It's about obviously brokers have to have confidence in you and all those things.
Yeah,
I think and your podcast, obviously your audience is targeted towards millennials. I think people who've been in real estate for a long time and they're at the point where I guess they're tired of the day to day. They look at younger people. I think you almost have a leg up on the others because they probably see a lot of themselves in you.
yeah,
You probably remind them of when they were young and starting out. I just had somebody call me today, a local developer. He does a lot with retail and office. And he said, hey, I have this retail strip mall. I just don't have time to manage it. I know you're a young guy, you're aggressive. Do you have any interest? I'll, pretty much let you in on it for, we didn't talk about the details, but it sounded like you wanted to just cut me in on the deal for no money on my part, just my time,
yeah,
my equity. And I said, I'm really focused on multifamily, and I'm definitely considering it. Put it that way. I have to look into it, see what the details are. But the point is, he looks at me as somebody who can, take something to him that I guess is not that attractive and something he doesn't have time for, and I could, do something with it. And he's willing to cut me in on the deal just for my equity.
wow,
And that's just for me. It takes time. That's just for me now doing what I've been doing
yeah,
for really for the last 5 years, seriously, multifamily, and word spreads. I think my accountant, we have the same accountant, and my accountant was telling him about me, and I bumped into him once, we met each other, and he said, I heard, you're doing big things, and you're really looking to take it to the next level. So people talk,
yeah.
and opportunities open up.
Absolutely. Yeah, and especially, I mean, I've always heard too, like the first multifamily deal is the hardest, but then after that, you can kind of use it as leverage. If you're going to meeting other brokers or meeting other, other investors who are looking to sell their building, you can say, hey, well, yeah, I own this building over here. Want to go check it out? And then we can talk about your building in the future. It's like, okay, this guy knows what he's doing. This guy already is in the multifamily space. And then they know you're going to close, or at least you're serious and you're a serious investor, because a lot of those brokers get phone calls from out-of-state investors all the time, and they have no, feet or foot in the market, and they don't know if they're going to close or if they're legit and all that kind of stuff too.
So the broker that I was telling you about that I partnered with, he actually found me because of that 11 unit. He saw that he had a deal not too far from there.
Yeah.
And he went online, he sees who owns buildings.
Exactly.
And he reached out to me.
Yeah, exactly.
Oh, you're right. That one deal, that was technically my first multifamily deal.
Yeah.
And it kind of puts you on the map.
Exactly. Yeah, because if let's say you're an agent and you're selling the apartment building next door, wouldn't it be smart to go on the tax records and see who owns the buildings all around, or the buildings next door, and be like, hey, I saw you bought this one last year. We have another one for sale right next door. you know that person's going to close. They know the area. They know the rents. Like, it's an easy thing for an agent to do that they should be doing to sell buildings.
Sure.
So going from, building up on that, where are you trying to go now? So you have 85 units, and what's your, long-term goal? What do you want to be doing? Do you still see yourself, growing the family business, or is that something you want to pass off, or are you going to be, real estate full time? What's your kind of goal that you're reaching towards?
Yeah, so the window cleaning business is pretty much at a point where it's pretty well managed. I still oversee it, but I have a really good team, and I have I have a manager in place there. So for now, I mean, the business is definitely isn't going anywhere, but I'm pretty much going to go full time in real estate. I'm in 2019. I'm really looking to do something large, 100+ unit complex.
Got it.
That's really the next level for me. So I'll definitely do that through syndication. There's no doubt. So yeah, that's pretty much where I'm heading in 2019. It's hard to say as far how far I want to go. I don't think I'll ever stop.
Yeah, I know. Yeah.
I got to be honest. I think I chose real estate because it's something that I can truly say I don't mind owning any of my buildings forever. I don't. If I had to own all my buildings forever, I have no problem with it. And it's one of those. It's just one of those things that I could see myself doing even in old age. I don't know. I enjoy it. It's really not like work to me.
Yeah.
People. Especially when I was a little younger, my late 20s, and my friends were going out and partying, and like one night, I had to leave because a pipe broke in a building, and my friends like, "What are you doing? Sell that building!" Like they look at it as just a big headache.
Yeah.
And like no, like this is nothing. Like in the grand scheme of it, it's I don't know, it does just not work for me.
Yeah.
So that's really why I love real estate. I just it's so long term. Everything else, especially nowadays with tech and startups, everything's like how fast can you sell and how fast can you exit and get funding, and I don't know. To me, it's just very short term.
Yeah.
And as sexy as it seems, and all that, I don't know. It's just not the direction I want to go in.
I agree with you. Yeah, and I'm buying stuff now. I have a turnkey rental property business, so we sell properties every month. But I'm also buying stuff under my personal name, and buying stuff from my turnkey company under my own personal name, financing that with conventional Fannie Mae financing and all that kind of stuff too. And for me too, it's like, it's a 30-year mortgage. I don't care if I ever need to sell. Like if somebody comes and offers me the right price, but I'm waiting for that property to pay itself off. And when I'm, 55, 60 years old, it's going to be paid off and making me $500 per door. And
Right.
that's my retirement plan. And I don't care about a 401k or even looking at the stock market again. These things are going to pay themselves off without any of my money. And in 30 years, it's my retirement plan.
Yeah, I mean that's what really drew me to real estate. That was like the first light bulb that went off. It was like, so you can put down like a minimal amount of money and somebody else will pay your mortgage off for you. Like, why doesn't everyone do this? I don't know. It just seemed to me like that's a home run. I want to do as much of that as I can.
Yeah.
And there was. Do you ever hear of Trammell Crow?
No.
He was like a big time developer. I think like back in the 60s and 70s. But there's like a quote he said, "Debt is the way to wealth." And I think he was a billionaire. He was really big. But debt is the way to wealth, and it's true. Like the more debt you can, good debt you can get, good debt. You don't want the bad with debt, but the more debt you can get in your name paid off. I mean, it's more equity for you in the long term.
Absolutely. Yeah, I agree with you. And then looking at the deals that I currently own, it's I have a couple houses under my personal name. It's like every single month my net worth is going up by $800, and it's like with your day job, that's a fifth of your salary or whatever that you're making here in LA or anywhere in the country. So and that's all completely passive, just from other people going and working their jobs and paying for their rent. So what do you think about the current, obviously you just put another building under contract, but what do you think about the current market? Are you nervous of buying apartment buildings right now because in 5 years you don't know where the interest rate would be, or what's your thought about where we are in the market?
I guess I'm definitely a little bit more cautious, but I also I'm very bullish on apartments long term.
Yeah.
So don't, and like I said, pretty much anything I buy at this point, one of my criteria, I ask myself this question: if I have to own this for the rest of my life, am I okay with that?
Yeah.
And if I say no, I have to seriously consider it because I never want to have to be forced to sell. So I want to be able to hold on to it for the long term. And the longer you hold, the less risk that you have, the less that your liability you have. That, like you said, the debt's getting paid down.
Yeah.
The rents will continue to rise over time. Sometimes faster than others, but they're tied to inflation. They're always going to go up. So yeah, I'm still very aggressive. I look at a ton of deals. There's very low supply in my market. But yeah, I guess I'm a little, I keep my eye on the interest rates and I'm cautious of it.
Yeah.
All the debt I've pretty much, secured for the long term.
Got it.
But yeah, I go into, I'll take that into account. And I think, just what's went on in the last year with rates, cap rates they're starting to come up a little bit.
Yeah. Got it.
We have to be careful now because a lot of deals are still, they're still pushing deals for those, the same cap rate as a couple of years ago when rates were, a lot less.
Yeah.
Yeah.
Got it. Yeah. I mean, I think it's going to be interesting to see what happens, especially with multifamily over the next year or two as the market does correct itself and the cap rates do go up a little bit as well as the interest rates going up. So it's going to I think there's going to be because all those people who did, like you bought an apartment building 5 years ago and maybe you're coming up on the refinance right now. Do you have any buildings that you're coming up on the 5-year term that?
Well, I was that 11 unit I told you about.
Okay,
that
you just did it.
Just recently, that was coming up, so I refied it, locked that in, and got my money out.
Okay.
Other two that I bought in 2016, the 26 and the 16, I locked that I got 10-year debt on that.
Okay.
So that's all set.
Gotcha. And then the current building that you have under contract, are you going to put that one on a 10-year as well?
If I can get it. If I can get it. The bank that I used I don't think they're offering 10-year money right now. So I'm almost considering doing like a 5-year because I have a couple other buildings that will be coming due in 5 years, and maybe at that time I could do some kind of a package type.
Got it.
Get better financing.
Yeah, because that's what I've been thinking about too for my building. We're getting it on a 5-year, but I'm going to increase the value of the property over the next 12, 24 months, and then I'm thinking of just doing the cash out refinance early. I don't know where the market will be or where the interest rates will be, but if worse comes to worse, I'll just pay the prepayment penalty to get my money out because I think the interest rate's going to keep going for the next 8 years. And I don't know where it's going to, I don't want to be stuck in year 5 with, a 10% interest rate and now the property doesn't make sense and I got to, force sell the thing to get my money out.
Absolutely.
Yeah. So it is kind of scary. But I think that, again, like you said, if you have a long-term vision for the property, I know there's a lot of other multifamily investors who are putting the 10-year terms if you can find a bank who does it. We don't have any W-2 income for our apartment building, so we actually have to use an asset-based lender, which is a whole nother game within itself because the property was less than $1 million. So if you're over $1 million, then you can go and use Freddie Mac financing, which I'm assuming for those ones over $1 million, did you use Freddie Mac or?
I did not. I used that local bank I was telling you about.
Yeah.
and then when I refied, I purchased that next property with the same bank. So I never have. I'm sure on my next one I'll be looking at them. Non-recourse financing and all that when you get to that size of a loan.
Yeah. Especially with the 100 units. I mean, you're going to be Freddie Mac, non-recourse, all those kinds of things.
Right.
Cool. Well, thanks for coming on the show. What's the best way? Anything you want to plug or anything that maybe people are, in your local market who can reach out to you? What's the best way for people to get in touch?
Yeah. So my company's Edgewood Group, edgewoodgroup.com. My email is al@edgewoodgroup.com. I'm on Instagram. I'm going to stop building up my page. I haven't really put too much content out there, but that's Al DeAndrea is my handle. And no, that's it. I just I want to thank you for having me on today.
Absolutely.
And I appreciate what you do. It's good for the community.
Absolutely. Yeah. Thanks for coming on again, Al. And yeah, if anybody wants to reach out to me, My Instagram is Martel Antoine, Martelantone. Thanks for coming on the show again. Hopefully we'll have you back late next year when you have a 100-unit under your belt, and we'll ask you some questions and dive into that deal as well.
Sounds good.
Cool. Thank you.
Thanks, Antoine.